All right, all right, all right. Good afternoon. 1 o'clock, and we are getting ready to rock and roll here. We're going to go out and see if we can't do a little day trading. We're going to try and practice our strategy once again. Uh-oh. Did we just fail? Are we still here? I got things failing all around me. All right. Hopefully that didn't fail. So we're back. So let's get rock and roll. First thing I want to do before we go and start doing a little day trading is I wanted to kind of review our stock portfolio. We didn't have a chance to do that the other day, and it's been doing pretty well. We got to move a few things around a little bit. But before we do that, let's go look at this market and see what it's doing. It's being pretty quiet. Okay, this is the S&P. Let's go look at the NASDAQ, which is the one we want to trade. So it's already gone through basically a 3-drive pattern up in here. Drive 1, drive 2, drive 3. And so, I don't know. I guess we could try and take the short positions, but we got the nice little trend line. Let's just do a progressive in here. It's easier. How'd that do? Did pretty well. Connected here. Now it's starting to break and roll around as it finishes off that 3-drive pattern. Question is, are we going to get a good enough run to get a drop? Oftentimes you don't like to take the first one because it comes down, goes back up, stops everybody out, only to take off and fall again at that point. So not real excited to get in on the very first drop. Sometimes though, you know how it goes. Sometimes it just flushes and goes and leaves us behind. Sometimes it just goes sideways, doesn't go anywhere. So let's just let's give it a second. We'll keep our eye on it. And we're going to come over here and just kind of review some of our stocks. So how's things going for people? Got a nice little crowd here this afternoon, so it's good to see you guys all here. And here we got Bruce coming in with the gold. Nice to see you, Bruce. First thing, we got Chad coming in there, number 2. Got the silver, and we got Kirk coming in with the bronze. Nice to see you guys, 1, 2, and 3. Anybody else wants to say hello? Go ahead, throw your little marquee up there, and I'll make you famous. All right, let's come in here and go down through our list. We'll try and go relatively quick, and we'll also at the same time keep an eye on what's going on over here in the futures market so we can do a little day trading, because I know that's what we're here for. We come to see us do a little day trading, but we need a market that's moving. Nothing really seems to be moving, and so it's generally the NASDAQ is the one that moves for us, so that's one I kind of got my eye on. This is the Dow. Now that one had a beautiful move, didn't it? Now the question is that thing going to give us a little ABC and continue down like that? Or is it going to be a little ABC and look like this, not break the new low and go back up and give us what we call a little bat formation, right? You guys like the bat formation? Looks like a little bat in there. Doot, doot, doot. And then you tie off his little wings like that, and then you got a bat formation. If it does that, bat formations are generally considered very bearish at this point. So they make that next wing up, they tie off that high, and then flush like a toilet out of that bat wing. But you can always ride that bat wing all the way up. So there is that. If that's what it does, nobody knows. All you do is wait for it to break the little yellow lines, little yellow dots. And then that's when you take your signal. If you want to take your signal, get in, cut your loser short, let your winners run. That's all the name of the game is. That's how we do it. Or we could scalp. We do have some scalping tools over here, so we'll do a little bit of scalping. This is the Dow. Let's keep an eye on that one too. But while we're doing that, we'll come over here and look at our Apple stock. Apple, these are put options that we sold. And so we're just collecting premium on them right now. I asked them if I could get the old version back, and they said no. We already updated everybody to the new version. So I guess we just deal with what we got. Go sell this software. This software that I use is called StreamYard. Everybody write StreamYard an email and say, get your shit together. Yeah, we didn't have any of these problems with the old version. Now we got the new version, and we just have problem after problem after problem. Pretty popular software. I don't know. Can't imagine other people are, not experiencing these problems and trying to yell, yell, yell. All right. I don't know if you guys are seeing the problems on your end. Maybe nothing's happening on your end. It's working just fine. All right. So we've collected $315, $269, and $100 on that one. So that's 3, 4, 5, 6, close to $700 on these little options right here. Now, all we have to do is wait for them to expire. I'm expecting Apple to climb up out of here. Now, the problem is this looks like a 3-drive pattern. Drive 1, drive 2, drive 3. Could be a little ABC retracement, come back down into that Fibonacci sweet spot off that bottom there. If that's the case, we're going to come back into the delta cone of probability, which is right here, right where our orders are, which is not a bad thing. Because what that would do is that would give us 100 shares. If it hit that purple line underneath that red line, we'd get 100 shares there. We get another 100 shares here, and if it came all the way down here, we get another 100 shares here. Now, we don't have to take the shares. We can just roll these options out of the way so that they don't, and just push them out in time so that we don't have to take the shares. But we might do that with this one. If it drops down in there and starts to come down, we may push that out. But I'd like to have some shares of Apple. That's why we're putting in these in here. We want to get a few shares of Apple so that we can start running some covered calls. You make a lot more money on covered calls than you do on selling puts. And the reason you sell the put is so that you can get the shares, but you kind of want to get the shares at a nice price. And that's not such a bad price right there. I mean, it's somewhere, it's kind of dead center of the Fibonacci sweet spot. So if we get some shares there, that wouldn't be bad. But again, we'll watch it. And if we need to, we'll roll this one down. We can roll it out. And then we'll just take our first set of 100 shares down here. All right. And then we can start doing some covered calls and make a lot more money. So let's go look at Airbnb. Airbnb. I know these guys. Airbnb. I actually Airbnb my little condo during the summertime when I'm in the northern country, staying cool for the winter, for the summer, staying cool for the summer. So that's what I do. I Airbnb this place out. Helps me pay the bills. I like it. Although people kind of tear your place up. They treat it like a hotel room. It's like I tell them, hey, this is my personal residence. But they come and do it anyway. They tear things up. They break stuff. So if you're going to do the Airbnb thing, make sure you realize don't put anything in there that you really care about because, man, they tear it up. People tear it up. All right, what are we going to do on Airbnb? We're just going to collect some premium, $89, which isn't that much, but it was a pretty good little percentage-wise. We're down 70% if we liquidate it right now, but we're not going to liquidate. The reason we put that in there so we could buy some shares, right? And then we start doing some covered calls. So if the market comes down to that red line, touches that purple line, we'll get some shares. All right, I said we're going to keep our eye on some of these things over here, but this thing is dead as a doornail. Look at that. Hasn't moved an inch. Pretty quiet market. Let's go. Wait, let's look one more time. Let's go back to the NASDAQ again. That's the one that seems to work for us a little bit. It's still kind of sitting there. Well, it did come back and try to break that blue light, and then it's dropping again. I mean, we could put a little order in there just for fun. We just put a single. If we put a single in there, we want to put a stop in here because we don't want to take a big risk. We put a stop right just above that flat top. All right. If it goes up and breaks that flat top, we'll just get out. But if it does go down, we'll put in there edit and we'll say trail on that little yellow dot down and we'll trail that yellow dot. But right now we're kind of got a little topping formation here. We did get a little pullback here. Now it's starting to fall. We'll just let it see if it wants to go. Otherwise, we get stopped out with a small loss and we'll start over again. But while that sits there and vegetates, we'll come over here, look at our stock list again. We're going to come down to the AMD. Now again, this in here is we're looking for that X2SA1. This would actually be, that's not labeled right. That's an X3SA1. X3SA1 down here is what we're looking for. If that thing comes down, we may end up picking up some AMD shares down here at this red line. That would be a good thing. We could start doing covered calls on that one. All right, so that's where we're at, looking for that 3-drive pattern. I didn't know if we'd get the 3-drive pattern because an Elliott wave generally has drive 1, drive 2, drive 3, And that was kind of an ugly little drive 3, but with a 3 drive pattern, and then you get an ABC pattern down, and then it generally goes sideways. So that's our ABC, and then this is kind of where it oftentimes goes sideways, tries to decide new direction. So that's kind of where we're sitting right here, just kind of dead center. Now, if it breaks out the bottom of that, we'll expect it to come down and make that third drive pattern, X3SA1. That'd be a good place to be buying some AMD, looking at that thing to turn and start to rally and go back up once again. All right, so that's the game we're playing there. Amazon. We're not in this game. We already took our profits off of here. It went up, made some money. We took some money off because we made so much money so fast that we were deciding, well, let's just take it off. So now we have to decide if we want to put some more on. You want to buy some Amazon? It'd be nice to have a little Amazon. Probably back in this location here would be a good place to own some Amazon if we could get it at that line, right? If we could give it on that little break right there. Thing is, we got drive 1, drive 2. It almost looks like a reset in there. Market just went sideways, didn't really continue that overall trend. You can see we got that progressive trend line in there, and it broke that. And then we got these lazy trend lines in there, and it took off again. So this looks almost like a new one, a new first drive, doesn't it? That's kind of lazy. And it might be I don't know. You never know. That could be drive 1, drive 2, lazy, and then drive 3, and then it'd get the flush out here. So that's why we're kind of being a little cautious here. But this could be a new drive 1. You get a little pullback and then take off, go to drive 2. But this is right here. If we label this, those of you who have Chad, I saw Chad's in here. You have your book. If you go look in your book, it's going to tell you the stock market playbook of strategies. It's going to design for you or tell you how to label these things. So you can look at your probabilities. If we call this a new A, it could be a C because drive 1, drive 2, flat, drive C. But it almost looks like with a new reset of the progressive trend lines that we're starting a new drive. So we could call it an A and realize that it's the possibility it could be a C. All right, we'll call this an A1. So we're going to put that in there. We're going to call that A1 right in there as it broke that, took off and go to the moon. If we were to put the blue lights in here, that's probably where we'd get a break right in there. So this is A1. You see this little pennant formation right here. It's just a little trend, a little pennant. Looks like a little flag formation right there. We're going to call that A2. That's the second drive of the first drive. So that's an A2. So we're going to set that in there like this. And we should probably come down here and make this a little bigger so you guys can see this. Let me put me down here in this corner. All right, and then this one here, we got another little pennant coming in here. See that little pennant just like that? You see that little pennant right in there? So now we got another pennant. If that breaks higher and starts to go up, that's going to be your C or your A3. So that's your A3 up in there. A3 is not a good place to be trying to get in. I always tell people don't get into the market on an A3 as a fresh new entry. Why not, Lan? Because it doesn't generally go very far before it flushes, breaks those yellow dots, comes down, gives us an ABC pattern, and then starts to go back up again. Gives us the B1, and that's the new first drive of the B drive. So that's what we'd look for. So that's how we're looking at Amazon right now. The question is, if it came back and tested this low right here on that retracement, and then that would be broke those blue lights to the upside again, that'd be a great place to buy ourselves some shares. So if we wanted to, we could dump these things here. Then, well, let's leave those in there. Those are the lazy progressive trend lines. Okay, lazy progressive trend lines. And then you got the horizontal coming off that peak right there, and that gives you kind of a convergence of lots of little stuff happening right in here. It'd be nice to have that come back down there. We could pick up 100 shares of Amazon and start doing some covered calls on that one. So how do we do that? Well, very easy. We come in here to the options tab. We come out here, we drop in at 38 days, and we're going to sell a put right there and say, hey, we'll buy some right there from you. How much you pay me if I do that? They said right in here in the options tab, we'll pay you $164. Well, if we're willing to go up a little closer and buy them a little higher, to give us $269. Do we want to do that, or we want to do that a little more safety? 4% return or a 5.82% return? Well, I think I'd be a little bit more conservative. $20,000. We don't have a lot of money. We'd have to probably get a margin call if we hit some of these. We'd have to liquidate some of our positions and so we could take our shares. But otherwise, we just roll this out of the way. Might as well take the more money just in case that thing rolls, right? We'll do one there. How about we do two of them? We do a vertical diversification. So how do we do that? Well, we come in here and we sell another one right down here on the same ticket, and we collect one from each. Rather than doing two of one, we collect one of each. We receive $438, which is a 5% return on average. And we have 272 in one and 167 in another. Would be required if it came down here and touched that purple line, this purple line underneath these red lines, to buy some Amazon at that price level. But we can just roll them out of the way if we don't want to. We just roll them down, roll them down, roll them down. There's nothing wrong with that. That way you don't have to buy the shares if you don't have the money. All right, so we just go ahead and we'll just, since we're selling them, we got to go to the bid. So let's go down to the 433 right here. And we hit place, and we just sold ourselves some options. So now we just collected $300 and, well, close to $400. All right, let's go see if there's something else. That's a good way to make $400 real fast. Now we have to just wait. Just wait. How are we doing? Look at this. It's so dead. You guys see that? See how dead this market is? What's today? Friday? Friday afternoon? No, it's not Friday. It's Tuesday, right? Tuesday after a holiday. Yesterday is a holiday. Today's a wide open day. You guys all should come rushing back and wanting to make lots of money. And what time was this? This started at 11 o'clock this morning. This is, wow, all that run all day. Now we're taking it, giving it back. I don't know. It's not moving, sitting there within $15 where we put it on. That kind of sucks. All right, let's come back over here to the exciting world of stocks. All right, Amphenol. We don't have a position in Amphenol. Do we want one? I don't know. We like Amphenol. Not a bad company. We'd have to go do some additional. But you look, we got nobody's trading the volume on it is zero today. $10 on the spread. That's a nasty spread. 0.8% against $125. There's nobody trading it. It's coming down today. So our implied volatility, well, even still, it's only 24. This thing is theoretically worth $117, and they're paying you $125 for it. So it's a little bit more than what it's worth. I mean, you could play with the idea of putting on some Amphenol here. Let's go see what we could get into. $125. That's all there is in there. 125. Well, it is 7.36%. Where are we at on this thing? Look at the progressive. Oh, we're at the top of the third progressive drive. Look at that. So we got progressive 1, progressive 2, progressive 3. That's our 3-drive pattern. So there's our 3-drive pattern. Drive 1, drive 2, drive 3. And this thing even went into a 4th drive. I think we need, I don't know. I think we need a little bit more of a pullback. The thing is there's the Amphenol on this one. I have to come way down here. And we don't have much money left. We've only got $17,000 to play with. Let's go see if there's not something better we can get into. Alibaba. Still flushing down after that big, massive rally. So we put ours in at the high of this previous high here and said, if you go and touch that purple line underneath that red line, we'll buy ourselves some Alibaba at that price. So we'll have to see. We'll have to see. We'll have to see. This is green down here. That's a good sign. But the MACD, look at the MACD still flushing a little. That market right there flushed good. What are we, if we liquidated this thing and bailed out, we'd be down 155 on it. We could roll it out. What would it be if we wanted to roll it out? If we come in here and we sell one down here a little bit farther away, we got 190 out of the last one. That's 160. So we're still in good shape. We don't need to roll. Let's ignore that one for now. Let's go to Bank of America. Bank of America. We took our money off of this one. We had and it went to the moon. We took our profits. We had everything out that it would give us. And so now all we're doing is just having FOMO that we're not making more money on this market. Let's look at our progressive trend lines. Kind of comes up to there, doesn't it? We could go out to this one. And that almost goes to that one, doesn't it? I mean, you had your natural one right in there. You had your counter trend. You had another natural one in there. It almost made you wanted to put this to here. And had you done that, it kind of came to this one. And then it broke it and then came back up again. Let's do progression on that one. Come back down to this one. It almost feels like it's respecting both of these, isn't it? That's kind of crazy. What are we going to do with that thing? How are we going to make money on that? Well, let's see if it'll let us sell some premium against it and at least collect a little bit of money. I don't really want to buy a call. If you just went and bought a call on it, $135 all you'd have to spend. If you sell a put down here, there's nothing in it. Nothing. They're only going to give you $92 on that one. Let's kill this one. Sell a put. It's way up there for $92. It's 8% return. 8% in 38 days is good money. A 5% return there. But it's way up here. Then it's come down here. If that thing went down, you'd end up buying there. You could do that. It's only $59. If you're going to do it, you might as well just do it right up there. Just put it right there. And then you're just going to have to roll it down if it falls. But for $138, that's 10% return. You can't complain about 10%. This isn't a very expensive stock. It's only trading at $46 a share. So we could easily do it. It's only 100 shares. You'd have to come up with $4,600 if you wanted to get filled. Do you think that market's going to still go? The question is, you do $138. If you bought the call, how much the call cost you? It's going to cost you $138. And if it went up, break even on that thing, $138, it has to go up to about right here before you start making any money on it. So anything above there, of course, at expiration would be profit. If it took off and just kept going, you could make money all through here. But at expiration, it's got to be above that green line or else you lose everything. So even if it comes up here and you don't liquidate and it comes down, and then it comes back up like that, you lose your whole $136. Well, what do they say? Don't buy into overextended to the upside markets. But how, markets can just keep going. Look back at this thing. They can just keep on going. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 bars. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Look at this one. 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. 1, 2, 3, 4, 5, 6, 7, 8. This market certainly has the ability, but it likes to go in fives, doesn't it? 1, 2, 3, 4, 5, pull back. 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 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, pull back. It likes to go in fives. 1, 2, 3, 4, 5. Let's sit on our hands on this one. Right? We're going to sit on our hands on this one. We'll watch it for a little while. Beto. What did we do? We bought a long 100 and we sold a put down here. We buy some more. So we got 151 coming in here. Plus we're up on 100 shares, up $167. If we got 100 shares, why don't we see if we can sell? Well, you know what? We could sell a call against this. But the reason I decided not to sell a call or buy a call, or no, sell a call. So we do a covered, and we only have 100 shares. You're going to collect $100 right there. But that's $100 in this much time on a market that's really busting out. 1, 2, 3, 4, 5. Yeah, we might get some pullbacks here on our Beto coins. This is what do we call this market? Bitcoin. Boy, where did that go? Disappeared right out my ear. So this is Bitcoin. It's been going to the moon. I mean, it broke that trend line like we talked about in that last video, and it took off like a rocket ship. And if you put your covered call in there, then you stop the profits are there. So if it's above that, anything above that market by that purple line, you don't get to keep any of that. So that'd be 200. And so how high would our just a break even would be $100 right there. So that would be, if you think the market is going to be above that, the possibility it might be above that, you wouldn't want to do a covered call because that's your break even from where it's trading right there. What do you want to do, guys? What do you want to do? Want to put a covered call on there and collect another $100 off of this thing as it rallies? Or do you think it might be above that green line by that purple line? I don't know. This market's been going crazy, so I kind of not want to put that $100 out there. We could always roll it, yes. I can hear some of you saying, well, put it out there, Land, collect the $100. And if it doesn't keep going, you get your $100. If it does, roll it out, collect another $100. What do you care? We could try it. Okay, well, do that. All right. Okay, then. We'll go ahead, and since we're going to buy this one. We're going to sell that one. We're going to go down to 96. So there's our covered call. So we put a covered call on that thing. And I accidentally deleted the wrong tool because that stupid thing, such wide gaps on the tool nowadays. So that's $100 right there. Put that in there and see if I can send back. Kill that one. There we go. So that's our break even. I'll bring this up here and point that out there so we know what we were talking about. If it falls back down, we'll buy another 100 share, another sell two. We sold 2 puts. So we'll buy 200 more. We'll buy 200 more. I think it'd be good to have some more Bitcoin. If it'd fall back there, we'd actually buy some more. Might roll one and buy one. So we'll see. That's what we're going to do. Try that with Bitcoin. How's that? CBRE. We're going to skip that one. Capital Group Dividend Values. CGVB. Skip that one. Skip that one. Delta Airlines. Let's put in our progressive trend line. Dun, dun, dun. Let's go all the way up. Where? Oh, it's to that one? Not really. Not really one, is there? That thing just kind of lackadaisically just went right up just like that. Let's come in here and see where this thing ends up out there. I don't really like that, but we don't have much choice. We're going to go through this one here to this one. And that's where are you going to anchor that? And you're like, Land, what difference does it make? Just stick it on one. No, it makes a lot of difference because where you put that anchor can make a big difference out into the future. And where more people anchor it is where that thing's going to have more tendency to go. So it depends on where all your buddies, pals, and friends are anchoring their trend lines because out here in the future, this is what they're bouncing off of. So, but we've got a nice little progressive trend line coming in here. Look at that. And they're respecting that line there. See that? They're respecting it. So we anchored it here, and then they respected it there. They respected it again here. So that's an active trend line right there. They didn't ever have to hit that one. Well, if you anchor it here, they respected it there, respected it there, respected it there. And then that's where we went here and started respecting this one. So that's where our 3 drive pattern is. Drive 1, drive 2, drive 3. Delta Airlines. What are you going to do, Land? That thing's going to the moon and you're missing it. We made some on it, a little bit, not very much, but we made a little bit. But now what do we want to do? we could say, well, the thing is, if I want to buy this one, I don't want to buy it way up there. It's too high. It's a fly high. It's a high flyer. That's a high flyer, man. We want to buy it down in this region here. And if we put in our order to buy some, sell a put, we ain't going to get nothing out of it. $21, $34. It's not even, that's not worth it. That's commission on a day trade. Wait 34 days for that much money is not worth it. Oh, we got stopped out. Oh, look, we lost $130. Is it going to fall? There's our stop right there, right at the yellow dot. That's pretty close. If it stays below it and starts to fall at this point, that'd be a good place to get in because your stop would be so small. But if it goes up, it just stop you out with a very tiny, small stop. But who's to say it's going to go down? It's not moving enough to scalp. We can't scalp this market either. So all we could do is, well, if it goes back, we could put in a progressive trend line right here. Say that's our progressive. Extend it. As long as it stays below that line, we stay in. Looks like it wants to. Of course, it could just, ignore that altogether and just go right through it, go sideways. What do you want to do, guys? It's not doing nothing. It's dead. Dead, dead, dead. As long as it stays below those yellow dots, as long as it stays below that red line, I mean, but right now it's just doing nothing. You could sell one just in case. Sell two just in case. Put two, stop. Put our stop above that red line, which would be that yellow dot. And just say if it stays below the red line, we stay in. Ignore the yellow dot. I don't know. See where the yellow dot gets to. Take another hit. Probably be another $130 that we'd lose. Take two shots at it. Everything's saying down, 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 down. That's right at the VWAP, isn't it? All right, let's stop staring at paint dry and come over here and watch paint dry over here. I'm not doing anything with this one. I think we're going to wait for some profit taking in here, whether it happens right now or a little bit later. Get this thing coming back down. We can sell some premium and get some higher implied volatility, which is nothing to do right here. It's just flying too high. I mean, you could sell up here. We could sell a call up there, right? But we'd have to buy and then we have to roll it out. We could do that if we think this market's going to turn and fall. You could sell a call up here. What do they cost? You get $169. Yeah, there's $100. That's 9% return right there. That's pretty good money in 38 days. A 9% return on your money. And how many days is that? 38 days. So take your little calculator and we go 38 days. So we take 365 divided by 38 days equals 9.6. So let's just say 9. So we're going to take 9.93. 9.93 times 9 equals 2 9s are 18. That's 89% return on your money. That's pretty good. I mean, I don't know how many other places you can go to do that. Get 89% return on your money. So you could put that in there. That's what you're getting, 89% return on your money, as long as you can collect that full $105 in that 38 days, and that market doesn't go up there and you have to take a short position. Of course, they're going to margin you at $1,000 on that one to get that $100. That's where you get your 10%. Let's come in here and buy a call up here. See, then it just starts getting to the point where it's not worth it. Because then you take, okay, I'm going to buy some insurance up here. Well, as high as you can buy that insurance is right there, right? So $39 against your 105, you're going to collect $66. $66, which is 13% return. You'd have to do 2 or 3 of them. And then if that market did rally up there to make it worth it, there's $265 at 13% return. You're liable to take 4 short positions at $70. The question is, do you think it's going to go up above that red line by that purple line? That's the game you're playing. You'd always roll it. The thing is, you're rolling 4 contracts to get $100 or $265. It's 13% return, though. Let's go look at the volume on this thing up there. These are puts. Let's go look at the calls. So we're paying $4 in spread, $7 in spread on this one. That's as high as it's go. That's the very top. So the probability of being in the money is 11%. So on the high one, on the low one, it's 25%. So you're at a delta of 0.26 up there, and it's currently at a delta of 0.6. Yeah, that's the big question. Do you think it's going to be above that red line? And if it does, if it goes up there, you're still going to collect your 432, but then you're going to have to roll it out again and then anticipate the pullback. This is $2,000 is what it's going to cost us to put that on. So you pay $158 to protect our 432. If it goes up there, we roll it. All right, okay. It's going to cost us a lot of money to get in there, though. All right, we did it. We did it. We did it just to see. Come on, let's go, boys. Let's go down to FIFIB. You want to do the same thing here? How much money we got? We're running out of money. Yeah, we got $14,000 left. Got $14,000 to play with. $14,000 in buying power. Look at that market go. Look at these little things here. What happened there? What happened there? They look like earnings. Another earnings right there. Is that what those were? Quarterly earnings every 3 months. 1, 2, 3. Way down at the bottom. Broke up. After it did this last time, it took off and went up. After it did this last time, it went sideways. This time, it did that. We're going to expect it to do the same thing. So if it does the same thing from here, where it's currently at, the red, 1, 2, 3, 4, 5 bars, 1, 2, 3, 4, 5 bars, from here to here was a 10% run. So if it went there to there, we'd expect in the next 3 months the same thing. And then we could call that a drive 1, drive 2, drive 3. Is it worth it? Is it worth it? It's not worth it. Why are we even looking at this thing? Look at the options on this thing. You don't have nobody's even trading this thing. Why is it even in here? Buy. See ya. Land, buy some shares. You go buy shares. That's no fun. Anybody can buy shares. Not anybody can trade options. You have to be special to trade options. Aren't you special? I'm usually special in my head. All right, here's Goldman Sachs doing that same damn pattern that we just played with over there and pontificated and tried to figure out what we were going to do over there on Bank of America, wasn't it? What do we do with Bank of America? Nothing. We bailed out. We ran away. We cried to mama. I don't know what to do. Goldman Sachs is doing the same thing. Goldman Sachs is trading at $595 to almost $600 a share. Wow. Bank of America is trading at $45 a share. Wow. Okay, it's a bigger investment. Make more money. Yeah, let's see. Goldman Sachs. What are options at? No, look, there's very few of them. Nobody's trading it. Oh, look at the spread on that thing. Premium on it, though, is beautiful. Look at those premiums. Okay. Not really. Not per puts. Look, their theoretical value, they're worth $2,200 and they're selling them to you for $1,800. They don't think that thing's going up. That's what that tells me. They think that thing's going down. If you wanted to buy 100 shares, it'd be $59,000. I don't have $59,000. All I have is 14,000. What do we do? What do we do? I don't think we do anything on this one. I think it's too big. I don't know. If we sell a put way down here, it's $150. The chances of that thing getting filled are next to nothing. We don't have enough money to even secure it, though. We'd have to put in an order. Let's put that right there. Let's say if we wanted to buy, that's $180. $180 if that thing flushes and comes all the way down to here. But then we have to come up with $52,000. Not really land, because you can come in here and you can buy a put down here. It's $93. Buy one further down. Now that's a $3,000 investment to make $179, which is only 3% return. Only 3% return. A 3%, 3.62% return. Again, there's 8 of these things in a year. So 3.63 times 8 equals, it's a 29% return on your money. And that's pretty safe. You know, is Goldman Sachs going to flush all the way back down to there? I don't think so. I think people who bought it are pretty happy they have it. I don't think they're going to sell out. Maybe a few of them, obviously, but I think most of them will hang on to them. If it came all the way back down there, we'd make ourselves a whopping $100. But that's a long ways. What percentage would that have to be to fall that far? That'd be an 11% return. Doesn't mean it's unheard of. That was a 9% return. That was a 15% fall. So it's not like it can't do it. Not like it's unprecedented. Certainly is precedented. What about that one? That one was 7% return. What about this one? Just for fun. That was a 7% return as well. So it would have to make an 11% return, and it doesn't do that very often. Only one time right there in the last bunch of times, but that one made 9. I think we're going to do the same thing to this one that we did to the other bank stock. What was it again? America, right? America, Bank of America. Yeah. I think if we were going to do it, we should do it on Bank of America. It's smaller. We're smaller. We got a smaller account. So the bigger account, although the numbers are a lot more fun to look at, you know, thousands of dollars, it also needs a lot more money to trade it with. We're way up at the top of the Bollinger Band anyway, the Delta Kona probability. Is it going to come back down into the Delta Kona probability, or is it going to go up and start a new Darvas box? That's what that's the thing. That's the thing. You never know, because it could come up here and say, now we're at the bottom of this new Darvas box. Let's draw the center line of the Darvas box. Right there. So we're at the bottom of the new Darvas box, or the top of the old one. How big was this? Let's measure the size of it, should we? What's the size of that first Darvas box? First Darvas box was that big. So if we take that and say, okay, there's the second Darvas box is up here. So we're at the bottom of the next Darvas box. And one day you're going to look back at that and say, why didn't I buy it right there? And when it was really low, when it was going up into the next Darvas box, because now it's going to be up here. And you're going to be asking the same damn question. Is it? Probably. How long was that Darvis box? This Darvis box was this long. So if we put this Darvis box at the same place as that Darvis box, that's our projection. So we expect it to be right here, breaking out of the Darvis box, the top of the Darvis box, and that would be a big move. That would be 16% move. Is that what this was? Does this actually work, Land, to sit here and do all this? Who knows? makes for good YouTube. Who knows if it's going to work? Darvis thought it did. That's why we call them Darvis boxes. Darvis thought it would work. 26%. Darvis made a lot of money trading like this. That's why he wrote a book about it. He's like, I got rich doing this. If you guys want to do it too, it's pretty cool. All right, well, let's go draw our Darvis boxes then. Darvis. There we go, little Darvis doing his boxes. There was the last Darvis box back there. There's the other one right there. There was the other one right there. There's a Darvis box to a Darvis box to a Darvis box to a Darvis box. Is it just going to keep doing Darvis boxes? Nobody knows. But that's what old Darvis would tell you. He'd say, buy, Lan. 38. Let's buy. Sell a put right there. Click $61, 6% return, and pick ourselves up some shares at that level so that we can go into the next Darvis box. If you take that away, that projection, you're going to come in here and say, why in the heck is he trying to buy at the top of that drive? Well, because we're actually at the bottom of the next Darvis box. And the market might not ever come back down into this Darvis box. It might, though, because we know the empirical data distribution model tells us, right, that this is a cone of delta probability down here, and it might come back down into this delta cone. It might flush all the way back down into here before it turns and goes back up into this Darvis box. But we'd have to roll this if we did that. We'd have to roll it down, and it's only $61, and you could lose a ton of money. Rolling it. If that market doesn't just keep on trucking. What have you got to lose, Lan? It's nothing but money. Okay, let's just put, you want to do one or two? It's only 4,500. That would be taking 1,000. That would be taking two. 6% return is pretty good. Let's just do one in case it flushes. We'll have to roll. Okay, let's go down to 60. See if we got that in there. We did. All right, made another $60, but that one's so that we can buy some shares, because it'd be nice to have some Bank of America as it rolled up into that next Darvis box, and then we could this is definitely a buy high, sell higher strategy. Although we got our order in to buy on a pullback, so we'll see. What did we do? We just skipped this one, didn't we? I don't even know why that's in there. What is CBRE? Isn't that real estate? I think that's a real estate company. Capital Group Dividend Value. I think that's real estate too. Dividend CGDV. Capital Group Dividend Value ETF. No, I'm not sure what that is. I have to go look it up. I can't remember why I put it in there. Might be one of our dividend ETFs. Crush, Title, Trust 2, Yield Max. That's not one we want to play with right now. That's a different thing we're looking at. All right, this is Delta Airlines. We already did that one. Goldman Sachs, we did that one. Global Stat. Now this one here, this is where we got in on this thing. Remember, this was one of our day trades. Not really day trade, but yeah, it's one of our day trades, one of our short-term trades, because what we did is we went over to our FinViz And this is one of our morning trades where this was a percolating up. It was a nice big move. And we bought our call options and then we let it run and made a bunch of money. We were pretty happy with it. One big contract with Apple. We took a position, made good money, but now I just wanted to watch it and see what it does. Let's go look at the options on this thing. 38 days. Some people are putting them in right here. Oh, look, premium to receive is, what the hell? Sell that. Clear down here. All you get is $1. Why would you do that? They probably didn't do that, Lan. They probably collected premium down there. Let's see. So they're hanging on to them. So ooh, look how wide these things are. Oh, this is only $1. This is $1 a share. That's $2.50. That's $27. 2% return if they came back to there. Well, that's a fun stock. We're going to watch that one, keep on watching that one, because that one's got big contract with Apple. So if it would pull back and give us a little bit of a pull back into the Fibonacci sweet spot, and then anticipate that's the bottom of our next Darvas box and rally up from there, that would be a fun place to be in, right? We could get into that one. We could get into this one again. We just need the opportunity. IBM, X1SA1. This one here, I hate X1SA1s. I always have bad luck with them. So we're going to expect this thing to flush and come down here. Although that's not such a bad thing, because I'm thinking I would like to own some IBM. It's $200 a share, 20 grand. We could own some IBM, and then if we own some IBM, we could do some covered calls on IBM. IBM's really just gone nuts so crazy. Where's the bottom of that thing? Clear back here. There's a little double bottom. Let's go off of that and do a progressive trend line. So we go off of here. Where did it get respected? To there? I think so. It did. Look at how nicely respected it was all the way up that thing. Let's come in here and turn on the laser beam. All right, we're going right through the laser beam right now on that one. And then we got this one with this little pullback here. Was it ever respected? No, it never was. What about up, up, up? Let go, let go. Oh, come on. What if I want to do something like that, guys? So there was our non-respected line. It's like that was better respected, clear up there. And it broke right there. So almost like, I think we have to go back to here. And then we have to go to here. And that's our 3-drive pattern. Those are the lines they respected right there. Right? Am I right? I think so. So that's your X3SA1 off of your 3-drive pattern to the upside. So this is an ABC coming down off the backside. A, B, C. How far is that thing going to come down? Down into the Fibonacci sweet spot off of here. That's a long ways to count back. But that would put us right in, well, that's why we have our order there, right there at 61.8, isn't it? That's probably what we did, and that's probably why that order is sitting there. And that makes that an X1SA1, and it's failed. It's going to break those. Is it going to break the yellow lights? But it's gone red already. It's gone red today. So it's going to go down. Give us an X2SA1. Maybe we can pick up some IBM. We'll see. It's coming in relatively early. I don't think anybody's going to give us our shares here. They're going to wait for it to get out here and find out where it's at. There's too much money in there to give up. $152. They don't want to give that up. All right, JP Morgan. We already did that one. Oh, this is just that's the bank one. Oh, we got a covered call going on it. We bought 100 shares and we sold a call up there for $340. Oh, this is a little bit easier. This is better than the America one. America Bank or America Visa or whatever it was. Bank of America. That one was only like $25 a share, right? So we're over there fiddling around with pennies. Over here, this thing's $239 a share, which is much better. Much, much better. I don't know what difference it makes. It's all relative. $239 a share, $23 a share. You just buy more shares. Still costs you the same amount of money to get in and hold your position. It's all multiplies by 100. Why do you care, Land? Because they got bigger numbers over there. I like bigger numbers. We'll put in more bigger numbers on the quantity. You get the bigger numbers. But then I feel like I have to buy more. You do, but it's the same as doing a $245 share. What difference does it make? It's all multiples of 100. Just pick one. All right. That's the way you feel about it. Okay, let's come down to MasterCard. MasterCard. It's doing the same thing. It's just flying high up there. Way up in the third drive pattern. It didn't respect those three drives very well, did it? What are we waiting on that one? It's $500 a share. That's what we're waiting on. I thought we just had that discussion. What do you care? Because it's $500 a share. Look, there's no open interest. There's no volume. Nobody's trading it. That's because it's $500 a share. Okay, come down to mags. Magnificent 7. Look at it, breaking out. We got our 3 drive pattern in this one, and then it went to the 4th drive. Preferences. That did not respect it right there. We had no respect right there. Respected that one, and then it took off. There's our 3 drive pattern, and now it's going into a 4th drive. Drive 1, drive 2. It's almost like a little drive 3 in there. You want to call it drive 3. You don't want to combine that and just say that's all the one drive. Drive 2, drive 3. We're going to call it what it is, man. It's a 4th drive. It's a rarity. Now, the question is, are we going to go into the next Darvis box? Have that discussion again. Len, are you going to have the same discussion over and over again? You're boring. I know it's boring. Trading is boring. If you're doing it right, it's boring. If you're doing it wrong, it's exciting. Oh, wait a second. Let's go see how wrong we did it over here. Doggone it. We got stopped out again. Didn't respect our line that we drew. Well, now it's staying above the red line. As long as it stays above the red line, stay in, Lan. It's just going sideways. It's not going up or down. Why don't you scalp? Because it's not going anywhere. It's just sitting there. If I scalped, I'd probably get my hiney handed to me too. I'm already down $490. I'm going to have to go sell some premium in the stock market to make up for today's lousy day. Twice we tried to get in this big, giant market. We'd been superheroes, though, if that thing fell. We would have been superheroes. It ain't going. I don't dare scalp it because it just ain't pushing. You think it's going to push higher? Might. I don't think so, though. I don't have any confidence in it. You guys want to scalp it? I don't want to scalp it. But that's why you're here, Lan. 2 minutes before the bells ring. Scalp a few. Just do it, just for fun. Okay. If you insist. Do it with a oneer. I don't know. I don't trust it. It's not even going to. Maybe with this one. Come on. That might have done it if we'd have grabbed the right button. Grab the wrong button. Yeah, now watch it go up and stop us out. Oh my goodness. Who was it that's saying I should do that? That was you, Bruce. I heard you. No, it wasn't Bruce. It was Nick. Yeah. I hear Bruce blaming Nick. We played it the wrong side anyway. We did it wrong. You did it wrong, Lan. Would have been right if it would have won. You wouldn't say it was the wrong. There's the end. Market closed. The hungry gator pattern. You playing the gator gator? Get rid of this thing here. Just get rid of the moving averages and turn on the gator. Alligator. Do you like the alligator? Never been a fan. Let's turn off the gator. Turn off the alligator. We could turn on the gator. A, B, C, D, E, F, G. There's the gator. Get rid of RSI. See, never really been a fan. Today it loved the VWAP. Yeah, it sure did. Back and forth, back and forth. Nick says he at least got out with a tiny, tiny profit. That's good. Glad somebody made something today. Let's see. Let me see how my day ended up today on the other chart over here. My real money. Break even, break even. My Biddo's doing okay. Can't complain about that. So overall today, with my positions, all my options and my, oh, well, let's see. I got the wrong setting on this one. How come I can't change it? Today's return. Oof. I guess all combined today, I made $1,800. I can't complain about that. Made $1,800 today. That's with all my options paying off and my positions that I have on. And where did that money come from? Which big position move? None of them. I didn't have any big winners today at all. I didn't have anything. Why can't I get that to do what I want? There was just a bunch of little, all kind of small winners. They all just kind of did a little bit, but I ended up $1,700 at the end of the day on my position. So that's not bad. I can't complain about that. But nothing real superhero of any of them. They just kind of all did a little bit good. Just all did a little bit good today. So that's mostly, you know, like, where did that come from, Lan? Well, it wasn't this type of trading. It was this type of trading that we did over here. All these things I'm doing over here, that's what I do in my real money account. I do them here with you, and then I'm like, oh, I like that when I go put it in my real money account. Do I have all of them? No, I don't have all of them. I have most of them. Most everything we do in here, I have in my real money account. So this is what I do. This is where I make most of my money, doing this stuff. I like to day trade in the futures market. I love doing it. But you can see it's a real hit and miss. I'd rather if I'm going to do that kind of trading, I want to have the market really popping off so that I can get into a trend. I like to trend trade and then do the scalping stuff. I like to do the scalping stuff. And I've been having good luck with the stop one. I'm trying the limit one now. It's not doing too good today. Be nice to have one winner. in the scalp side. But we did get over there in the stock market, right? I mean, we sold some options, we picked up some premium. Those will all decay and pay off. Okay, now don't go shooting to the moon. Back off. Back off, you. Get one little winner here with a single. Market's closed. This is after hours trading in the futures market. Come on. Failure. Failure on me. There you go. Come on, drop down there. Just sits there and bounces back and forth between two ticks. Up, down, up, down, up, down. Look at the contracts picking up over there. This bar, believe it or not, has 2,300 in the first after hour bar. It's got 2,300 contracts traded hands. There it goes. Sell off. Sail off. Sail off. There we go. So we had one winner, $25. Woo! So I'm getting a tiny profit there, Nick. We're just goofing off now, guys. I don't want to go do anything else. If we close out and I can say work's over, I have to go do something else. This is too much fun to sit here and play around with you guys. Why would we go do something else? What else is there to do? Go watch political videos on YouTube? Who wants to do that? We've been doing that to death. All right. Here's the stock market. We can go down through some more of these. SCHD. Oh, there. It's about time SCHD starts to flush. We can get back in on that one. We can't put any orders in. The market's closed, so we could sell that one. Oh, that's way down there. Get $7.50. You only get at $50. There's nothing in those options. They are nothings. SCHG, that's the growth. Super microcomputer. I don't really like this one. How come we have an order on there? We're up $58. Is it going to let me liquidate that right now? Get out of that thing. Get out of that dog. Why have we even put that in there? Why do we even want a new super microcomputer? SMCI. Oh, that's the microchips. Probably wish we had this one if I liquidate it. There, made $50. I don't want to trade that one anymore. Get out. Snap-on tools. Oh my gosh, look at that thing. Rocking and rolling. That thing is going to the moon. Drive 1, drive 2, drive 3, drive 4. It's another drive 4. Let's put in another progressive trend line right there. What are we going to do with that one? There's got to be a way we can make money on that one. Options. 38 days puts. Can we sell anything? Nothing. Nobody wants to sell puts on that thing. Nobody wants to buy puts on it. Nobody's buying puts on a market that's flying high like that. You guys need some puts. You need some puts. Aren't you worried about your long position on that market? Snap-on thing. What's the difference between snap-on and snap? Snap. Oh, this is that little app, phone app thing. Well, there we go. Now we're getting a little flush on it. I don't know if I want to buy it, but we're getting a little flush on it. There's nothing in there. It's an $11 stock. What are you talking about, Lan? Get rid of that thing. You're wasting your time. Now that I've heard of this one before, SPY. Somebody said you should trade that one time. They're like, that's a good one to trade. Who said that? I don't know. If we come in here and extend our line on that one, it only had 2 drives. And then it stopped going up. It didn't respect it. And then it came down and it did this one. And we were like, well, it ain't going up that far. it's going to come back down. It's going to come down, hit this yellow red line, and then it's going to go up. No, Trump had to get elected. And then that's what happened. The Trump train. How far is this Trump train going to go? This is probably a little bit of exuberance. And then maybe we'll get a little bit of pullback, test some of these areas of support in here, get an opportunity to put some more in. I don't know. Are we going to see it go to the next Darvas box? That's the question, because it could be in one right now. Because if we go to here, see that? It's in one right now. It's in the second Darvas box already. It's up in here. So how big is it? How big is that Darvas box? Gary, I don't know if you're saying good afternoon because you just arrived or good afternoon because you're taking off and leaving, because we're about ready to tie things up here. We've been goofing off all day, and see, this thing went in right there. So that Darvas box is right there. So if we make another Darvas box just like that one, and we take it up to the next level right there, we're sitting dead center of the next Darvas box. Let's make that Darvas box a Fibonacci box. We go from the up from here to here. If we do that, that's our, let's get rid of this one. We'll put that one where it belongs. You can do this, watch. Send to back. Okay, delete that one. All right. So if we can get it to come back to the peak of this, and if you say, well, that's the second Darvas box, and if you get a little pullback into 61.8 on the SPY, you might want to buy some shares, Lan. That's a little aggressive. What about the 76? Come in here and go to the Fibonacci line 78.6. That's down there. Let's put in sell a put right there at that next Darvas box. 78.6. That's $389. And you'd have to come up with $58,000, and you've only got $14,000. Well, we could roll it. Do we think the market's going to flush like a toilet? Not unless somebody shoots Donald Trump. Uh-oh. I wonder if YouTube's going to now ban me for saying that. Can you say that? He's a president-elect. Can you even like speculate like that? I mean, I didn't say to do it. I was just like, if somebody did something stupid like that, that would cause the market to flush like this. But short of that, I don't know what else would make the market flush like this. I don't know. I think that would be a good opportunity. I think that's okay to put in there. 391. I mean, the worst thing we do, we have to roll it. Right? First thing we have to do, we have to roll. We're going to collect $391. Market's closed. I don't know if they'll let us do it. We are in the demo account. 392. I would probably do this one with my real money account. In fact, if you guys are a little bit more schemish, you could put it clear down here and still collect $250. So I don't have enough buying power to do that. We don't have enough buying power. I can't do it anyway. It's not even going to tell me how much I need. Well, let's come in here and put in let's buy a put down here. It's $140. That's $3,000 in. How big can we go? 4,000. That's a $4,000 out of our 14,000. If we put that there, then so we have to pay $105 out of our $374. So we could put that in there. Gives us 6.9%. The thing is, if you push that all the way up there like this, you get a lower margin. See, $100 margin, you get 15%, but it's only $15. You're like, which is better, Land? Well, find yourself a happy medium in there somewhere that you're happy. That's why they call it happy medium. So you got return on risk is 11.45%. That's pretty damn good. You're going to receive $126. You're going to have a $1,100 margin requirement. But the thing is, if you come down here, they're going to take your shares away, so you're going to lose $1,000. They're going to margin you at max loss. Margin requirement 1,100. But I thought you could just roll it, Land. You can, but it just gets expensive to do this. You have to do a bunch of mitigating with both options. the puts, the one you bought and the one you sold. It's easier to do a cash secured. Then you don't have to sit here and fiddle around with this dumb leg of lamb down here. You could do it. You could do it. Do it, land. Do it at 10%. Would you do it for 10% return? 10% return, would you do it? Well, I think we're going to get a little pullback in here, and it would be better to do it if that got to be a red bar. If we could get a red bar in there, it'd be a lot better. Let's wait and see if we get a red bar, shall we? Okay. We'll keep our drawing. We'll keep our paintings in there. S-vol. S-vol? Oh, my gosh. I'm making money on S-vol hand over fist. This is one of the stock market. This is one of the things I bought. I bought a whole bunch right more in here. I bought $50,000 more right there. I already had a couple $100,000. I bought another $50,000. I think I got like over $300,000 in S-vol from down here. I think my average price is like that red line. And then this thing pays like a 15% dividend every month. Oh, it's beautiful. I'll get like $4,000 in a dividend every month off this thing. And I trade it. I actually trade this because you don't want to have a real high average position on this thing, because if you do, then you get your dividend, but the thing flushes and then it makes your account look really bad. Like when it does this, or when it does this and this and this, and you got your position from way up here, you feel bad. And I mean, usually it comes back close to it, right? But it's better if you can actually trade it like a trader and get in down here, dollar cost average in, get yourself a nice low, buy them down here. And then when it goes back, you make money on the NAV, but then you make that big old beautiful dividend on this one. So that's one of my secret weapons right there. Pterodine. This one I'm a little worried about. I put these orders in here and it's going red on us, and we bought them when it was green. Well, we bought that one. We got into that one when it was red, but this one we got in on a green. We got in on that rush right there. That was stupid, Lane. Why'd you do that? You're down $50. You only got $125. So that thing's worth $175 today on this little red bar. You only got $125 for it. This is $50 that you gave up because you got in a little bit early. It's supposed to do it on a red bar, not on a green bar. Don't sell premium on a big green bar. I know. I had FOMO though. I thought I was going to miss it. I didn't think I'd get a red bar this soon. I thought I'd get like 5 big green bars and I'd miss out. I thought Pterodine was going to go to the moon without me. It's an X2 SA1. I had a 17 in my hand. I still may have a 17. I'm just getting a little 2-bar pullback right here. And then this thing might go to the moon again. I'm ready. Got these 2 options in there. Well, what if it comes down there? Well, I'd buy some. I think I'd buy some of this one. 125 and 100. That's what we're looking at. Tesla. There's our red bar. Turn that off. That's not a red bar. It's still green. We already made money on Tesla. Now we need to make more money. I want more money. I want more money, guys. We already made some money on Tesla, but not enough. Now I want more. Isn't that how you guys feel about it? I want more money. I showed up late, but I'll go back and watch the beginning. Oh, this has been a wild ride. We were supposed to be day trading, but the market was so dead we couldn't get anything to happen, Gary. So we ended up putting in 2 orders to try and catch a short position off that big old green drive. And all we did is get our hiney handed to us on both of them. So ended down $665 on that, on the day trading. So you can see the market was just dead today. So there's nothing we could do. I tried to do a little scalping. I got 2 winners on the scalpers. 2 $25 winners. The rest of it was all just nothing. It's one of those days, man. We're going to have to make it up tomorrow. But we're doing well over here. We got all kinds of good stuff going on over here in the stock market, trading our options. We love trading over here. But we made a bunch of money on Tesla. Now we took our profits Now I got to figure out how to make more money on Tesla. We want to make more money on Tesla. We love Tesla. We love Elon Musk. Let's see. Everybody go buy themselves an electric car. You going to buy an electric car, Lan? No. No, I don't think so. I love Elon Musk. Elon Musk, I love you, man, but I can't buy your car. I can't do it. I can't make myself do it. Look at all these little plays in here. What are we going to do here? This little explosive market. We could go out a little farther. We could do a 66 day and sell a put because that's $360 right there. $360, that's a 10% return. You'd have to just hang on to it clear out till there. But then if this did come down, you could buy some Tesla down here. And that would not be a bad thing. Then we could do covered calls, make a lot more money. Make more money on covered calls than you do on short puts. We don't have very many covered calls on though, do we? Well, it's because we're so good at picking direction that we never get any of our orders filled. And then when we do, we roll them or we take the profits. We don't let them fill. It's because we do them so far away. It's like, look at this. We're looking out here 66 days. So we can make $417 in 66 days or 10% return on our $4,000 investment. That would be pretty good money. You can't shake a stick at that. That's good money. And the only downside of that is if the market turns around, you'd have to buy your shares if it touched this market down here. You have to buy shares at that price if it touched the purple line under that red line. But Lan, what if it goes clear down here? Roll it. Roll it down and out. Just keep rolling it ahead. If you think Tesla's going to fall down there and you don't want to buy it down there, well, it shouldn't do it. Don't put your order in there. But that's the downside. Yes, Tesla could go flushing clear down there, but the likelihood of that happening is pretty slim. And Slim pretty much left town. That would be a 60% return on, or 60% fall in Tesla. I don't think it's going to happen. Doesn't mean it can't. Certainly can. I mean, if some orange man gets shot, then it'll probably happen. But you never know. You never know. I think that's a good play. I don't know if they'll let us do it after hours. Nope, didn't fail. They're not going to let us do it. Now I want to do it. Now because I can't do it, I want to do it really bad. Now I really want to get in there. Come on, guys, let me in there. Let me in there. No, we're going to do that tomorrow. We'll sell some premium for Tesla tomorrow. All right, UPS. That's flushing down. Supposed to sell it on a red day. Visa. Wells Fargo. Another one of those bank stocks. XDTE, Round Hill Trust, Round Hill. S&P 500, 0 days till expiration covered call strategy. We could just buy some of those. They pay off dividends every single week. Yeah. All right, guys. I guess we're going to let you go. Gary, thanks for coming and joining us. We're going to cut the show. We're going to cut the show short today. We've only been going for an hour and a half. So we're going to let you guys go. Made enough money for a cup of coffee, did you, Nick? That's always a good thing. Ready for another day. All right, I guess there's not much else we have to say about that, so I'm going to let you go. We do have a Sunday school lesson. Let's go throw that up on there. Volatility is your friend. Short-term day traders and/or scalpers love volatility. Volatility is what moves the market. News, weather, government reports, earnings, interest rates, and technical traders. No volatility, no trend. No trend, no trade. Man, and that was the absolute perfect lesson for today. when it came to this market here. Look at how dead that was. No trend, no trade. All right, guys. It was a fun day. I enjoyed this. I had fun. I liked going through the portfolio. I think I'm going to put some real money Tesla on tomorrow. I'm going to drop that Tesla in tomorrow. I'd like it to see it pull back a little bit and catch it on a pullback so the implied volatility goes up. So if you're going to put that Tesla trade on, let's do it when the market's pulling back a little. If it starts to rally again, let's sit on our hands for another day or two. But we get a pullback on that Tesla, that'll be a good time to stick that thing in there so we can get some implied volatility for the next run up. And if we ended up buying some, that wouldn't be a bad thing. We could start doing covered calls. All right. So see you guys tomorrow.